I think every owner-operator probably has a little bit different strategy, which is also true for institutional investors. Fortunately for us, our strategy and our outlook coincides with our investors' strategy and outlook. So we're much more of a core 24/7 TOD-oriented, bi-coastal, actually the Smile states, so Boston, New York, Miami, Dallas, Houston, Austin, San Diego, LA, San Francisco, Seattle, with one in the middle, Chicago. So we like those geographies very much, and we like the urban core, relatively new product. We think that will sustain above average NOI performance over a long period of time. There is, as I mentioned before, a shift in attitude. The average renter cohort, or the most prominent renter cohort of the 25 to 34-year-old, really would like to live where the action is. That's downtown. We want to live where the action is, where the jobs are, and so we see continued demand for high-quality products in the core locations. I think it's a legitimate and probably quite profitable strategy to be investing in value-add properties in the near-in ring. We're not doing that ourselves, but I think some of our peer companies are finding success in upgrading units with the granite countertops and better cabinetry and hardwood floors and achieving appropriate returns on investment there. But I think relative to the other real estate sectors and relative to the other investment alternatives, multifamily is a very strong place to earn returns. Our view is that many of them have learned from the past cycle that they would prefer to invest their capital alongside a vertically integrated real estate operating company as opposed to an asset allocator. So the largest of the funds who have the flexibility of going through due diligence process, identifying a vertically integrated real estate operating firm, would prefer to do so. I think certainly the smaller institutional investors will still have to invest in commingled funds or open-ended funds. But I have seen a shift towards partnering with vertically integrated operators. I've seen a shift in higher allocations to the multifamily sector as the institutional investor reflects on their current asset allocations, and they observe that their allocation to multifamily is not as high as they probably would like it to be. They've gotten more comfortable with the asset class. They are certainly noticing the stability of income, the fact that even in a down market, one can reprice the units and maintain a full occupancy in a property, which is very unlike the office sector or the retail sector or the industrial flex sector. So they like that the low beta, and they like some of the alpha that they can achieve by investing with the appropriate vertically integrated operator.